Hey guys, and welcome to the Working Money Channel. So Stefan Hubert here on Twitter posting this. You're around there somewhere saying, we're only trading flat. XRP is going nowhere in this bull run. I am 100% sure. I'm selling my XRP now and investing in Cardano. Exactly what I was saying yesterday. That's been performing very well. It already made more than 5,000%. So guys, Stefan Hubert also pointing this out, this thing that I was mentioning in yesterday's video. If you guys didn't catch that video, I'll link it up here. Flat, flat, flat until we are not. Now, this is the XRP chart from back in 2017. I'm going to bring it up on the current chart here on TradingView. And just to show you guys, this is, I don't have it on log right now, just to kind of demonstrate this more clearly. XRP throughout the bull run trading fairly flat, right? It really wasn't until those last few weeks in December of 2017, right around here. So I'm going to just show this to you guys because I feel like not enough people get this. It wasn't until here and then XRP really just popped, right? This is when we came up with that term last and fast. XRP is last to move and fast to move, and at that point it went up almost 1,400%. Now, let me remind you guys, that was in and around December 11th, 2017. Then XRP made its final leg up over 1,400% in what was like 3 weeks. Okay, so you remember that date, December 11th, 2017? Well, guys, here's the Bitcoin chart on, I put it back on log scale. Just to give you guys a sense, this was the, let's call this the beginning of the last bull run in and around late 2015. Bitcoin rallied, obviously, all the way to the top up here, right up here, and I'll show you guys where December 11th was here on this chart where XRP, you know, trading flat up until right in and around here. Okay, this was roughly, give or take, December 11th, okay? So that's all it took really for XRP to finally get its legs and take off. A lot of people were taking their money out of Bitcoin. Some altcoins at that time had already been rallying. So again, guys, December 11th, 2017. Compare this to the XRP chart from way back when. Again, December 11th, 2017. And then we saw that 1,400% pop. And I get it. I mean, you know, cryptocurrencies like ADA have already made new all-time highs. So I have ADA here on the daily. Throw that back on log, and right now ADA trading at about $2.83. It did see a high of about $2.88 almost. So new all-time highs for ADA, and I understand, you know, crypto market getting towards extreme greed, or at least according to the Crypto Fear and Greed Index, it is already in extreme greed down here. You can see at 79. It isn't the highest we've ever seen it. However, of course, crypto market heating up because Bitcoin also did reach that $50,000 mark. So I got Bitcoin also up here on the 1 day, and you can see Bitcoin still chugging up past $50,000. Right now, Bitcoin is trading at about 50,300, but 54,000, that is still what we are eyeing here. That is the 0.702 level right over here, and you know, many of us thinking Bitcoin going to break right through that, make new all-time highs, but we could still see right in around here, we could still see some resistance and then form new lows. I mean, I'm hopeful that that's not the case. I'm not praying for that to happen. We still do need to see many altcoins reach their former all-time highs and beyond. So my thought is Bitcoin going to move a little higher. And in that video I did yesterday too, I did talk about this idea of not selling all your cryptocurrency just in case, because we might actually see a prolonged bull run. And I mean, even though we have projected prices for some coins like XRP between $10 to $15, for example, Bitcoin, you know, anywhere between $70,000, $80,000. These are just projections, guys. I mean, this is not set in stone. We may actually see these coins go higher. I mean, we may not, but, you know, this is partially why I'm not selling all of my cryptocurrency. In that video from yesterday, I also did supply you guys with my my Excel spreadsheet, my plan for cashing out. And again, if you guys didn't catch yesterday's video, you can check it out. This is the plan again. I won't go over it again, but you will be able to download it in this video as well. So I will put it in the description of this video. Want to continue, guys? Michael at Val5 Links here. The betting platform Gambler's Pick surveyed 1,000 U.S. digital asset investors to conclude that a big chunk of them, 37% of American investors, would not cash out of their crypto even in critical moments. So 37% agree that, you know what? Never sell it all. According to recent research, U.S. cryptocurrency investors have allocated on average about $1,700 in such assets. 37% of them admitted they would not touch these funds even if they must cover a necessary bill or an important payment. This is how hardcore cryptocurrency investors are. Somewhat expectedly, the celebrity who influences most of the respondents' crypto-related decision is Elon Musk. Many Americans have diamond hands, apparently. The betting platform Gambler's Pick surveyed 1,000 U.S. digital asset investors, and that was the conclusion. 51% went further, stating that they don't find even luxury purchases as a tempting reason to cash out. Taking a closer look at the different generations, baby boomers are the group that has invested the most in the crypto market, while Gen Z ranked last. That is probably just because of how much money comparatively baby boomers do have to Gen Z. Male Americans have an average amount of about $1,900 worth in digital assets and seem to have a greater interest in crypto than women do. Females' median number stands at around $1,375. So interesting to note, 37% not going to sell it all. Gonna keep going, guys. This is another one from Michael at Val5 Links here with regards to the U.S. bill, or rather 18 bills that Congress has apparently put forward on digital assets in 2021 so far. So, you know, we have been talking about the infrastructure bill quite a bit, but apparently there are 18 bills. So former FDIC regulator John Brett argues that U.S. lawmakers have pivoted away from private stablecoins to focus on regulating decentralized assets this year. So again, cryptocurrency adoption happening right now in the United States. These are the teething pains that we are going through. The United States Congress appears to be pushing for greater regulatory clarity regarding crypto assets, having proposed 18 bills concerning blockchain and cryptocurrency during 2021 so far. According to an analysis published by former Federal Deposit Insurance Corporation regulator Jason Brett on August 22nd, the current 117th Congress has broken from its predecessor in focusing on regulating decentralized assets rather than private stablecoins. In July, Congress put forward the Digital Asset Market Structure and Investor Protection Act. This was to create distinct statutory definitions for digital assets and digital asset securities, respectively. So that could have been good in Ripple's case. Although the bill is yet to pass through Congress, the legislation would mandate digital asset securities as the jurisdiction of the Security and Exchange Commission. Unfortunately, while the Commodities Future Trading Commission, or the CFTC, would have the authority to regulate digital assets. So sounds like there certainly are going to be stipulations. There are going to be different kinds of cryptocurrencies, and in a lot of ways, the crypto market needs this differentiation. However, cryptocurrency is going to be such a large industry that I am almost of the opinion, I have a feeling that this is kind of where I land on this. I think there actually should be a third body to regulate cryptocurrencies specifically. The SEC has already got too much on their plate, same as the CFTC. And, in my humble opinion, since cryptocurrency is going to be so big in the coming years, I do think that there should be a third agency that deals with cryptocurrency specifically and, can, for lack of a better term, separate the wheat from the chaff. So this article goes on talking a little bit about more details with regards to some of these bills. I will link this in the description if you guys are interested in reading in more detail. I want to keep moving, guys. I saw this from Real XRP Boy. Now, this was from 2013. It is a throwback, but Sarah Jane Hughes here from the University of Indiana Maurer School of Law, commercial law fellow, does discuss cryptocurrencies at that time. Yeah, in 2013, when, let's not forget, in 2013, where were we? This is the Bitcoin chart again on the daily. Let's go back to 2013. All right. Get rid of all that stuff on the chart. So the last bull run we saw was over here, started in 2015 up until 2017 or early 2018. But 2013 was way back here when Bitcoin was having this bull run. So this was 2013, essentially. And then we saw Bitcoin kind of peak out over here in November of 2013 before it came right back down and corrected to about a low of $151. So again, 2013, another pivotal year for cryptocurrency, so you can see why people were talking about it. And the reason I wanted to play this clip is because what Sarah Jane Hughes says here When we're thinking about it in the context of a 2013 cryptocurrency environment, I mean, it is what it is. You can take it from that context, but think about what she's saying, and we're going to place it into today's context. Just listen to this.
Second stage innovations that may have completely different roles in our economy, these new technologies may offer us, and we want to be certain we don't do anything to take them offline. I would encourage, on an interim basis, payment systems operators, assuming that we all agree that this is a payment system and not something else like commodities or securities, to adopt and publicize their own transparent standards of how they will behave. As you suggested, legal liability limits, dispute resolution possibilities, guarantees for redemption opportunities, and clear rules about when redemption can happen are all important user protections. Notice I said user and not consumer, because businesses who use have many of the same needs as consumers, and we tend to be focused on regulating for consumers.
She finishes that off by saying we tend on being focused on regulating for consumers. A lot of interesting things here packed in less than a minute. Discussing this idea of payment systems first and foremost. Now, I don't know if she was talking about Bitcoin in this clip particularly, or the entire crypto market. I mean, it is just titled digital currencies here. But, Bitcoin as a payment system, of course, maybe in 2013, some people thought that would work. Today, we know it just isn't scalable. But if we take what she's saying and, we kind of think about it in the context of Ripple and XRP, and even by 2013, Ripple had been off the ground and XRP had already been created. And so she talks about this, obviously, needing to be a regulatory framework, obviously putting in that caveat saying, if these things are not deemed securities or commodities, this should be regulated, and the companies involved should be transparent, which is exactly what Ripple has been doing since day one. Again, this is coming from a 2013 lens on cryptocurrencies. Fast forward to today, and obviously we have made some major leaps and bounds towards adoption. But even at that time, right, transparency, companies, because we don't want to hinder the end user, whether that is the consumer or whether that is the businesses using said cryptocurrency for payments. In this case, she's talking about payments, but you can use cryptocurrencies for many different purposes. They should not be hindered. And so I just wanted to kind of point out the fact that this is exactly what the SEC is doing, hindering the progress of Ripple's XRP, at least in the United States, so that the end user, whether it's a business or an end user, an end consumer, cannot actually use the cryptocurrency. I mean, heck, look, many of the major exchanges are not even listing XRP today just because of this lawsuit. So, thought that was interesting. Wanted to just bring you that perspective from 2013. Another one from Real XRP Boy here. It is funny considering another document, coincidentally enough, from 2013, November 2013. And this has to do with the present and future impact of virtual currencies. Okay, a joint hearing before the Subcommittee on National Security and International Trade and Finance and the Subcommittee on Economic Policy. So, from govinfo.gov, so this is a governmental website, Banking, Housing, and Urban Affairs, United States Senate, 113th Congress, first session on exploring the development of virtual currencies, their current and potential future use, and the regulatory, monetary, national security, and other impacts and issues associated with them. And, you can read this. I believe he does link he does not have a source for this. So maybe if you just do a quick Google search, you will be able to find this on the website. I do not have an official source for this, but it's funny because down here in this document, they mention, so in order for the legitimate uses of technology like Bitcoin to flourish, again, they focus on Bitcoin here because this is through a 2013 lens, it is imperative that its susceptibility to illicit uses be addressed. There must be a way to separate the wheat from the chaff. Highlighted here, obviously from Real XRP Boy posting this screen grab. Fast forward to, I believe this was 2018, okay? And Ripple, while discussing real-world utility, the chief executive of Ripple, the blockchain-based company in San Francisco, was recently interviewed by Fortune, where he said that banks and other payment providers are ready to flip the switch, as well as incorporate the crypto token XRP. Garlinghouse added that more than 200 banks and financial institutions that have signed on with Ripple are preparing to start using XRapid, which is now called on-demand liquidity, in order to improve the cross-border transfer experience. And this is what Brad Garlinghouse said a few years after that 2013 statement that I just read to you. this is the year the wheat will be separated from the chaff. So, I mean, it could be a coincidence. Of course, that is a term that's been around and that a lot of people have been using. However, somehow I do not think that this is a coincidence at all. And just going back to being transparent, right? What Sarah Jane Hughes mentioned all those years ago. Ripple has been transparent since day one. They have always wanted to be on the correct side of the law. They have never wanted to be associated with, the illicit activities that have historically been associated with Bitcoin money laundering, terrorist financing, so on and so forth. And so, these are documents from official government websites. And Ripple has been playing ball this whole time, separating the wheat from the chaff, as Brad Garlinghouse mentioned in what I assume was late 2018. I finally want to bring you this, guys, from Bruce Swan here on Twitter. And this is a clip from John Deaton's new YouTube channel. Apparently, you can find it here. And so the name of it is Crypto Law TV. If you guys aren't subscribed, subscribe to John Deaton. Just a quick clip here from John Deaton talking about the Ripple SEC lawsuit.
Attorneys keep saying to the judge, well, it's so different than Bitcoin or Ethereum because Ripple pre-mined their coins. And the SEC acts like they just learned that they just learned the Ripple story. And we know that they were working closely with FinCEN and that they were privy to the document that I'm showing you today. Now, the last thing I want to show you about this is attachment B, okay, of the settlement agreement between Ripple and the United States government. And when you go to the first page of attachment B, called Remedial Framework, it states in paragraph 2, subsection A, look at that. Any sale or transaction of XRP by Ripple Labs or any subsidiaries shall be conducted only through an entity registered with FinCEN. Ladies and gentlemen, I'm a lawyer, and I can tell you right from the beginning of law school, you learn these words called shall, only, that they have very, very significant legal meaning. And this agreement is basically telling Ripple that if it's going to continue to sell XRP, that it must be registered through only FinCEN, not the SEC. Doesn't say register with the SEC and register with FinCEN. It says shall only be through FinCEN.
All right, so I'm going to leave it there. Shall only be registered through FinCEN, because XRP is a currency. Brad Garlinghouse has said we want to separate the wheat from the chaff, and, this apparently has been a problem since 2013, separating the positive law-abiding players from the sketchy underbelly of the cryptocurrency community. One last tweet here from Stéphane Hubert. People who are afraid that certain top 10 coins will miss the bull run don't know how the big guys invest. And so this is another thing we have to remember, guys, with regards to XRP. I mean, right now we still haven't seen XRP even reach its inter-year high, let alone its all-time high. Well, many other cryptocurrencies like ADA have already done so. But let me continue. At the end, profits from coins that have already made their percentage are reallocated to those that have not yet made their percent. Until now, this game has nothing to do with fundamentals. This also is the reason why you should not be too greedy and take profits. The bubble will burst even with the fundamentally strongest coins, because at the moment it is not about fundamentals, but about whales who want to make money by eating fish. So, 79 on the Extreme Greed Index. Bitcoin obviously breaking $50,000, which is a sign that we are getting close to the last leg of this bull market. And XRP trading right now at $1.30. Not bad considering where we were a mere 6 months ago. Ripple will be separating the wheat from the chaff as soon as they get the clarity they need in the United States. And utility, guys. Utility is what will ultimately bring price to higher highs than you can imagine in this spec bull run. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.